Yes, hello, good morning, good afternoon, good evening, depending on your location or your country. Yeah, Black Dollar Ambrose speaking. Yeah, today I've decided to make a video on the pairs I trade. So I want us to begin with gold. I'll show you how I do my analysis and how I come up with my setup. So basically, I begin from the higher time frame. I begin from the monthly time frame. The monthly time frame I normally base on it to look for the directional bias of the market. Let's see. Looking at the past 4 months, the past 4 months, the market has been from around this area, the market has been bullish. That was on the 3rd October 2022. The market has been bullish ever since on gold. So right now my narrative is that the market is bullish. I go down to the weekly time frame. What do I look for on the weekly time frame? On the weekly time frame, majorly I also look for the directional bias or how the previous week closed. So looking at last week, the previous 3 weeks, the market was very bullish. So what do you think the market will give us for this week? So basically that is the directional bias. Because the thing is, when you're trading, you have to have a foundation. You have to have a foundation for your trade, like where was the market or where is the market going to? Like here we can see that the past 3 days, the past 3 weeks, the market has been bullish, and we see that right now, this week, this market has opened, but it is still bearish, on a bearish nature. So the thing is, we have to generate a directional bias. You have to create a foundation. You can't build your house on air. You can't just build your house out of nowhere, or you can't begin climbing a tree from the top. It's like when you want to it's like when you want to construct an industry. You can't go and construct an industry out of nowhere. You have to look for where several industries of such are constructed. Like let's say you want to construct an industry, you can construct that side of Namanga. You can't go and construct in Boise, or you want to construct a sugarcane plant for making sugar. You can't construct it in Karamoja. You have to go that side of Jinja or Iganga. So basically, let us now go to the daily time frame. We see what we have on the daily time frame. Majorly, the higher time frame is just for directional bias. We see on the daily time frame, we have to mark the previous day's high, which is this, and the previous day's low, which is this. So currently, as we speak, the previous day's low has been taken. That's the liquidity. Liquidity has been taken. So now we are targeting the previous day's high. So basically, on the daily time frame, what do we see, or what the market is what is the market trying to tell us? The market is trying to tell us that it may go and clear the previous day's high because the low has been taken. Because below here we have liquidity. Liquidity lies below the swing highs and the swing lows. Liquidity, and as you know, liquidity is what drives the market. So we proceed to the H4 time frame. The H4 time frame is where I begin the analysis. I begin my markings from. So basically, let's remove this. I want us to analyze some pair that I want us to analyze starting from the 24th, starting from the 24th, the 24th of September, 24th of September. Yeah, this is it. So basically, we see that gold has been in an uptrend for a long period of time, and it is evidenced by a break of structure to the upside. It is evidenced by a break of structure to the upside. So having broken structure to the upside, we pull out our Fibonacci tool from the low to the high. Because basically we buy from discount and we sell from premium. We have to buy when prices are low and we sell when prices are high. So this is our discount, our 50% zone is here. So this is 50. So that is our 50% zone. So we wait for price to come at least below our 50% zone, then we look for our confirmations and the shift in structures and we buy. So let's play price. Let's play price. So right now, remember we want price to rebalance itself to the discounted zones before we can buy further. So what do we need now? We need price to give us some sort of shift to show us that we are coming to mitigate the zones that we see below. So we need something like this, some sort of price action here like this. So let us see what we have on the lower time frame. So 4 hour, we go to minute 15. We see what we have here. Yeah, this is now our 15-minute time frame. We have now to identify the market structure shift that is on this lower time frame, because we need it to mitigate a zones that are below our discounted area, so that we can buy long term. So what do we have here? Let's play price because we need a structure. We need a structure to shift. We need something like this: a break to the high, the clearance of liquidity, then a break to the low, then a mitigation, then we drop. So what do we have here? Let's play price. Let's play price. So I think we have seen a shift in structure. Widen it. So this is the shift in structure we have seen. So we have seen a shift in structure. So now this is what we are waiting for. Remember we said we needed something. We needed something that would be an evidence that price is now going to mitigate our levels below. So now this is what we have gotten, because you can see it clearly. You can see it clearly. This is a high, higher low, higher high, higher low. Then now we need a mitigation of one of the zones below. Then we can drop. So we have we have a break of structure to the downside. This is our break of structure to the downside. Then we have points of interest that we do have above. We have various points of interest above here, because number one, we have an imbalance. We have this candle, this candle, this candle. These are three candles, and the space in between. This space, sorry, this space. So the region, what is in between? Let me text. So this space in between here is what we call an imbalance. That is the first point of interest. So the candlestick that is above, this candlestick that is above, is what we call a supply zone. Is what I call a supply zone. That candlestick that is above is what we call a supply zone. Then we also have an order block. An order block is the last opposite candle that breaks structure. An order block is the last. This bullish candle is the last opposite candle that has broken structure. So as you can see, we have various points of interest here. We have 3 points of interest. So far we have 3 points of interest. Yeah, the other thing, another confluence that is making this break of structure to be more valid is the liquidity. Liquidity is what drives the market. You can't trade minus liquidity. We have this. We have this. This is liquidity. Liquidity is what drives the market. So around that area, we have various types of traders that are shorting the market from there. That's why you can even see that there is this bearish candle that was trying to form. So we have trend line traders that are trying to short the market from here. 1, 2, the third type, this is where they're buying from. Their stop losses are above here. So that is what the market is also looking at, because liquidity is what drives the market. So we have 3 points of interest above. But the one that I will consider is the supply zone is what normally I base on a lot of things, but when I have a supply zone, I consider that one most. So let me remove this order block. Let me remove this markings of an imbalance. Yeah. So this is what we have. So let's play price and we see what we have. So let's play price. I think this trend line is holding price. Reason being, we have trend line traders that are shorting the market from there. So it's holding price. So let's play. So you're seeing how that trend line thing held price. Yeah. So it is trying to generate more liquidity for us to go to the upside. So you're seeing the trend line traders are being taken out, but after gaining something from the market. So before we go here, there is something we call an inducement. An inducement. Remember, when the market came and reached this area, it gave us some bullish, some bearish candlestick. So this is what we term as an inducement. An inducement is a move that happens prior to your point of interest. So this here is an inducement. It's like you see a lady that has made a lot of makeups. You'll be induced to go and talk to her because you see she's looking good because of the makeups and everything. So this is what the market does. An inducement has been offered. But then you have to be a patient trader because you have your point of interest that is above here. You have to be patient. You have to wait for price to approach your point of interest. So having approached your point of interest, now we are looking for entries. We go to the minute one time frame. Go to the minute one time frame. Time is running out. Go to a minute one time frame, and we want to see a shift in structure. I don't enter basing on candlesticks. I want to see liquidity swept. Then the market breaks to the downside. This is what I want to see for me to enter. Because I don't enter basing on candlestick patterns. Because here I see here we have a shooting star, we have a hammer, we have a lot of things. Three soldiers, all those things. So I want to see a shift, then I can enter. I want to see some group of people taken out. Some group of people taken out before. So are you seeing we have a break of structure to the upside, then a break to the downside. This is what we have. This a liquidity sweep, then a break to the downside. Then we need the market to dive down. So let's play price. So now here, it dive down to the minute 15 time frame. We see we have not it has now confirmed. We have gotten our confirmations on minute one. So let us now play price. Are you seeing how everything is now lining up? This is what we call top. You begin your analysis from the monthly and you end up in the 1 minute. A lot of people say 1 minute time frame does not work, but it works. To me, it works. I don't know to you, but to me it works because that is how I have refined my trading ideology. So this was a setup. I hope you have learned something from it. This is gold. Soon after here, I'm going to make one for EU. Then after I'll make one for GU. Then we can call it a day. So this video, I dropped it here for you to learn something. In case of any questions, inbox me, hit my inbox. Have a nice day. The EU setup, EU analysis, I'm going to drop after here. Thank you.